Okay, so today we're going to be talking about Vega Protocol, and more specifically, we're going to be running through how the protocol, which allows the creation of decentralized derivatives exchanges governed and run by the community, how it allows you to create markets which both settle based on customizable Oracle inputs, but also allow margining and settlement in any currency. And relevant to here would be any given stablecoin you want. So how are we going to get there? If I turn this on, is we're first going to give a quick overview of what Vega Protocol itself is. Barney's going to give a bit of background about the history and what it entails. Once we've got that, I'm going to run through what we mean by community governance, what a Vega Protocol market allows control of, how the community manage it and benefit from it. Once we've got that baseline, we can go through what a market itself looks like on Vega, and then sort of step through the various steps of how to propose a new market, creating a new asset, creating the market itself, and what it looks like once it's live. Once we've got that, we may have a bit of time to discuss rewarding early adopters as well. I'm Tom, I work in the research team building Vega Protocol. I've been here about a year or so, and I have a background in sort of traditional finance, 8 years or so doing that before joining here. I'm joined by Barney, who's one of our founders, and I think the first thing we're going to do is give a quick run through of what Vega Protocol is, and for that I'm going to hand over to Barney.
Hi everyone, apologies for the slightly late start, and thank you for coming to listen. So Vega Protocol is actually a protocol that was kind of conceptualized by me and my co-founder Ramsey back in 2017. We were looking at the sort of state of crypto, kind of looking at what was going on in, Ethereum was kind of quite new and growing. We were very interested in the idea of decentralized finance, so actually the idea of something that could start to replace the financial system. And we were sort of looking at the strands of technology and progress that would be needed to get there. And what we realized when we did that was that these kind of decentralized exchanges that existed, things like EtherDelta at the time, were really extremely basic. They weren't going to scale to and allow the creation of kind of a really fundamentally challenging financial system to the one we have today, and that this sort of underlying technology, this sort of blockchains that were running general purpose smart contracts, were also not really going to be bringing real world business on board. And so that was kind of our starting point for that. And one of the things that we had seen start to develop and take root and seemed to be something that was going reasonably well was the issuing of assets on Ethereum, particularly as ERC20s, which was paving the way for stablecoins. And I think, as much as many people in this space would love to see Bitcoin be the global reserve currency or Zcash or whichever their favorite crypto is, I think that's way further out than moving existing assets and currencies on chain and starting to do business with those. So it was a huge innovation and a huge step forward to be able to have these sort of early stablecoins and to have an ecosystem of assets and money that represent what we do in the real world and allow you to build financial products on top of that on chain. But what we noticed was missing was that you couldn't have price discovery that was anywhere near as efficient as the price discovery on, say, the London Stock Exchange or the New York Stock Exchange or other traditional markets. You couldn't have high throughput, you couldn't have capital efficiency. And so you ended up with what's basically a kind of beginnings of an alternative financial system using these assets and technologies, but something that realistically you couldn't go and take to the City of London or to commercial banking and start to say, these are alternatives to the products and systems you use today. And so we met with some researchers we knew at UCL in London. We started talking about proof of stake, we started talking about different types of decentralized network, and we came up with the idea for Vega Protocol, which was to be a side chain or an app chain that took assets that were already issued, for instance, on Ethereum as ERC20s, and allowed them to be used to create marketplaces that were what we considered like the beginnings of something that would be sort of real world useful. And so we focused very heavily on meeting those criteria. So the Vega network focused heavily on having a very short block time, sort of between 0.6 and just over 1 second, We're focused on not having fees for placing orders, so we have different ways to prevent block congestion and spamming of the network, but it means you can place orders completely for free, you can amend orders for free, and you only pay when you trade, so much more like a traditional exchange. We're focused on making it easy to create sort of robust and safe marketplaces and order books for price discovery. We will be building like sort of hybrid markets which allow AMM style liquidity as well, but focus on sort of robust order books and things like capital efficiency, so allowing good size margin rather than requiring sort of massive over collateralization like some protocols, and also just generally aligning the properties of the network we're building with what is needed to create sort of professional grade trading systems. Now obviously Vega's in alpha right now. You can trade real money on it as of a couple of months ago. You can create markets, there's reasonable leverage, there's an experience that's pretty similar to a centralized exchange but completely decentralized end to end, which is super cool. We're not quite there yet for moving Goldman Sachs and their trading desks onto it, but what we are doing is proving the concept out and iterating from there into sort of a world where you can start to do real world trading on chain. And a big component of that will be the ecosystem around stablecoins. We'll be having stablecoins that are trustworthy, and we'll be having markets that actually settle in real world currencies. Right now, most of the stablecoins are US dollar on Vega, and indeed in the rest of the market. But I think one of the things we'd like to see is that increase. So actually you start to have more currencies that relate to different types of market that people can create. And so all of those things are possible on Vega over the next 6 months, a year plus. And we'd love to see that grow and move forward. So after that sort of intro to what Vega is, I'll hand over to Tom to talk about some of the mechanics of how you actually create these sort of high quality centralized exchange like marketplaces on a decentralized network like Vega, and what it all actually means.
Cool, thank you. So now we've got a bit of background. What do we mean when we say you can run a decentralized community market on Vega? So there's various aspects of a market which are completely customizable by the community. So running through a couple of examples, we've got network parameters. The network itself and markets within that are governed by sort of a wide range of parameters, from everything from spam protection to market parameters that govern risk, that kind of thing. There's also what tokens themselves are available on the network. It's also totally community governed and driven. We'll go through a bit in a minute about how one adds a new token to the network. We also, through this, have to ensure that token holders themselves who are voting on these things have good clarity in what exactly they're proposing, what they're voting on, and what the changes might be in the future if they approve these things. So what is a market on Vega? It's a lot like a limit order book that you might expect in any given sort of centralized exchange, with a few additional things that are worth taking into account. One of these is we have a concept of liquidity providers. These are slightly different to a liquidity provider on Uniswap or something like that, where although they still stake some funds, instead of that stake being used to automatically trade, it's used as a guarantee that they will always provide prices on the market. Obviously, that's quite a commitment for them to make, and in exchange for that, they receive fees from all trades on the market, whether they're hit in that given trade or not. Furthermore, we've got a couple of auction concepts which are aimed to protect traders and customers in a couple of different cases. We've got liquidity auctions, which relate back to these liquidity providers. If open interest on a market grows too much, then we drop into one of these liquidity auctions to ensure that the outstanding position is never larger than sort of can be closed out reasonably by liquidity providers. And that encourages more people to come along, stake their liquidity, and bring the market back to life. We also have price monitoring auctions, which are another customizable feature of the market, which aim to prevent large price spikes by allowing price trading within some range of probabilities. And if a price would happen outside of that, then instead we drop into another auction for a few seconds or a few minutes customizably, which allows the market to hopefully come to a realistic view of what the price should be and trade again at that. And then the leverage itself is also totally defined by the community and a risk model. So rather than being a sort of fixed leverage number. You have a log normal risk model, which allows customization of this depending on the markets. And one further aside before we jump into how you create a market, you really need a way of simulating these markets and having an idea of what trading behavior might be, what they might look like in the real world before you actually make that change in production. So we built out something we call Vega Market Sim, which allows you to run locally an entire Vega chain with the data node in the front end and see what it would look like with given changes. So we've used this internally for just testing the network itself, but also being able to see and explore these sort of what-if cases of if we change a parameter to this, how might that affect the network? Do market makers and liquidity providers still receive the rewards they should, and that kind of thing? And it's a really powerful tool for the community to make these similar explorations when they're evaluating a given proposal. So now that we've got that background, we can jump into setting up a market itself. There are a few steps that are involved. First off, you obviously need an idea for your market. This has to come from the community ultimately, but there's a few components that we'll run through of what that idea should include. Once you've got that idea, you need to propose your asset. If you're lucky and that asset already exists on the chain, then you're done with this step. If not, we'll run through what you've got to do. It's fairly simple. Once you've got the asset on chain, you're going to propose your market. That's a similar kind of flow. You're going to discuss it, you're going to propose it, and then it's voted on and goes live. But the discussion is probably a little more involved because you're worrying about risk parameters and price monitoring and this kind of thing. Once you've got all that, there's a couple of last requisites for the market to enter live trading, but they're fairly light and we'll cover those too. So first up, the idea for a market. The idea itself obviously is up to the community, but you want something that people will want to trade on. And ideally, you also have someone who wants to do this initial liquidity provision, because although it's not necessary for the market to be approved, someone's going to have to do it for it to go live and trading. So it's easier to find upfront and know someone's going to do that. You then need to know what asset you're going to settle in, probably a stablecoin, but there's many cases where it might not be. You might have a BTC ETH future. You might, if you're wanting to trade NFT floor prices or something, then maybe you want it in ETH. And then finally, you need the settlement oracle that's going to actually determine what price this market either settles to, if it's an expiring future, or the sort of ongoing settlement prices of a perp. Right now, there's a couple available within the protocol itself. One is this open oracle format that a couple of people, including Coinbase, publish oracle prices in. And another is a trusted signer, which is broadly some trusted counterparty who promises they're going to publish the right price. Coming imminently is a much more powerful tool, which is flexible Ethereum oracles, which broadly allow you to settle a market based on any given solidity output. So that obviously massively opens up the whole world of what you can trade a market in, and hopefully can bring about some interesting ideas for new things to trade. So now that you've got your idea, you need to move on to your first discussion. So as I say, check it already if it already exists. If it does, and you're lucky enough, then you can skip this step. To do that, you go up here to explorer.vega.xyz. You can check this other tab and assets, and you'll see a nice list of what assets already exist on Vega. If it's there, you're golden. If not, you're going to have to go on to a proposal. So the proposal here, you're going to want to go to the forums at this link, open up your asset proposals, and broadly make a proposal. As you can see, the discussion here is fairly light and easy. Adding an asset is fairly pro forma. You want to discuss why people want to add it to the network, obviously, and specify a few details like the ERC20 contract address of it. People might want to discuss if there's any weird edge cases with this asset, if it doesn't properly act as an ERC20, USDT or something. But by and large, there's probably not going to be too much dislike of adding something new. They might just question why you want to add it. And it gives you a chance to make people aware of this new asset you want. Once you've got that, you'll build out this JSON. As you can see, it's pretty much the details that were here as in JSON form, nothing too complex, some details about the vote that you're going to create, and you'll have your vote. Assuming this is approved, which hopefully it is because you've discussed it all in the forums already, you now have your asset and you can run on to proposing a market. So for this, the flow is pretty much the same. You're going to create this market proposal in market proposals in the community, and headline, you're going to describe what the market is and what it's going to trade and why you think it's good to add to Vega. But there's a little more complexity in this setup in that there's more parameters and they have less obvious values than you may otherwise expect. So there's a few different ones. I'm not going to run too much through what all of these are because it's good to dig into the docs a little about what the different values are. But there's a few different areas that we're going to set. Firstly, we've got parameters defining the liquidity monitoring. This is the relationship between how many people we need staking liquidity versus when we drop into one of these auctions that we discussed earlier. So that's what you set here. We've got risk parameters, which these are obviously somewhat important because they define your margin that people can take, and also some of these price monitoring parameters that I'll discuss in a second. So you need these to be reasonable such that people can take enough leverage and margin that they're interested in trading on the market, but also aren't always getting closed out and owing more money than they have in their account, which is not a great place to be. Once you have that, we've got these price monitoring parameters. We are going to dig a little more into these in a second as a small case study, but broadly these determine the price auctions we discussed earlier. There's a couple of different fields on these. There's horizon, which broadly defines this time window as a number of seconds, and a probability. So at a high level, we're looking at over this number of seconds, is a trade executing at a price less likely than this probability? If it would, we drop into an auction of this many seconds. So we want everything within that price bound. And then finally, we've got our Oracle specification. This is where this is a market settling on a Coinbase open Oracle format. So they've specified their ETH address, which is the publisher of this open Oracle format, and then some filters, which pulls out the right price, says what specification of decimal places it's in, and some sanity checking, ensuring that it's above 0. Digging a little bit more into the price monitoring parameters and how that can have an effect on the market and why you want to think about these things. The values as proposed for this market when it was sent for a vote were these. When it started out, it was more like this. So you can see here there's these two extra rows of short price monitoring auction windows. And it's not entirely obvious whether this one or this one makes for a better or more tradable market. So one thing you can do is run them through a simulation and see how the market behaves and make a decision based on that instead as a more scientific approach to getting this done. So that's what you can do with Market Sim and what the community can then look at and decide how to trade. So this was a period last November when the price was pretty volatile. We could run it historically through the Market Sim based on the two price monitoring setups we had earlier. This was the price monitoring with the extra two short windows. You can see slightly faint here, a lot of vertical red lines. Each of these is entering a price monitoring auction. Now, entering an auction for a minute, 2 minutes is a little disruptive to trading flow. So you quite possibly don't want all these auctions when it's volatile and people want to be able to keep up with the market and keep their positions hedged. So what about if we strip out those two extra windows? We get something more like this. As you can see, there's still a couple of times when we're hitting an auction, but the flow itself is a lot smoother. We're in continuous trading a lot more of the time. So quite possibly we want something more like this than like this. There's cases where these tighter bounds might be useful, so that's why it's good for the community to be able to see the two options and decide on a market by market basis what you want. So once you've made all that discussion, you've hopefully now put it for a vote, and it's going to get approved, and everyone's going to love it, and it's going to move on to entering into an opening auction. Now here you're basically there. There's a couple more things you need. You need liquidity staked to this market. These are your market makers that we discussed earlier. Hopefully someone's ready to do that and is going to commit. And then all you really need are limit orders which cross to set an initial mark price, and limit orders which don't cross so that you actually have an order book at the state of time when you're entering into it. So now you've got your live market running on Vega. There's a couple more things that are worth considering. Your market may well not have all that many traders to begin with. So one thing that is built into the protocol that allows you to incentivize trading on your market a little bit are rewards. Now what these are automatically calculated metrics in the protocol which totally permissionlessly allow anyone on the network, without sort of governance voting or anything, to fund reward accounts, and based on the outputs for these metrics, reward positive activity on the market. So they can do a couple of things. They can either fund market creation. If you have a given stablecoin you want to create markets in, you can fund a pool that if someone creates a market with sufficient trading volume on it, they will get a reward. You can also reward providing liquidity if there's not enough liquidity providers on markets that you want to add an extra pool and an extra benefit for that. Or you can just reward straight paying and receiving trading fees, making it more profitable for people to come and sort of trade on your market versus elsewhere. And all of these can be specified to a market specifically, set market creation obviously, or anything trading on your given token. So for more information on that, you can jump over to this docs page and have a look there. So with that, that's broadly the talk as it is. Hopefully you're inspired to go create some markets on Vega. Yeah, any?
Yeah. Yeah. So the bridge is sort of Vega specific, but I think it uses a semi-well-known pattern. Effectively, what happens on the bridge is you send your assets to a smart contract on the Ethereum network. So it's an Ethereum bridge initially. All the assets are ERC20s. You send your assets to a smart contract on the Ethereum network. That smart contract is effectively controlled by the Vega validators. So effectively, when you send the assets there, they then get recognized in your Vega wallet and appear on the Vega network. And then when you want to withdraw them, effectively, you just say to the Vega network, I'd like to withdraw these assets, and the Vega protocol will then effectively check that you have a balance to withdraw, and the validators will sign a message which you effectively send back to the Ethereum smart contract. The interesting thing about this is that we can do some things because Vega is a app-specific chain that can't easily be generalized for sort of general purpose chains. So one of the things you find a lot of the time in bridges is you sort of have a separate bridging step and a separate bridging technology, perhaps with its own security assumptions, its own validators, its own sort of nodes keeping that secure. With Vega, it's the same validators as the network. So effectively, you're trusting a single security assumption around the validators on the Vega network, which is that the validators are honest validators for the Vega network, for the Vega protocol, for the trades happening on there, and also for the bridge. So there's kind of a single set of validators who maintain the security of the funds on the network and also the bridge because they manage that bridge technology. So you do have the same issue you have with all bridges, which obviously you have those assumptions, but in the Vega situation, you're at least making those assumptions about everything else on that network as well. So reasonably tolerable from a security point of view. I think certainly we've looked at future work as to how to kind of import additional security from Ethereum or other chains where you kind of have steps to add security with additional signing. But as it is, the bridge is a smart contract in Ethereum that's controlled by the Vega validators. So when someone joins or leaves that Vega validator set, effectively their rewards as validators are withheld until that contract is updated. So the validator set contract has to stay in line with the correct set. So when someone leaves the set or joins the set, the new set of validators sign a message containing that update, and then they deposit that on Ethereum to update the set. So it maintains kind of synchronization between the two. I don't know if optimism and arbitrum style would work on Vega. I'd have to think about it, to be honest. The thing we've been investigating probably slightly more is what's it called? ICP, is it right? Interchain protocol, yes, ICP. The sort of Cosmos interchain protocol, and looking at how to enable kind of bridging of assets between multiple chains using kind of a network of bridging, but also bridging of transactions and other data. So I think, in the long term, we would like to be sort of plugged into a network of chains and bridges that are sort of all compatible on a message level. And also, we would like to be able to pass things other than just assets. So you can pass assets and a limit order that you want to make with those assets or something like that across the bridge. So you can effectively have an order router that sits on one network that actually sends funds and directs trading on the Vega network. So that's probably the direction of travel. The optimistic roll-up type stuff probably... I'd have to think about whether or not there was a way to do that, but we haven't looked into that one.
But your assets now come from Ethereum,
yeah, exactly.
So you need to find new audience that people are willing to move their assets to the Vega. Yeah, it might work, but most of the assets are on Ethereum.
Yes, this is why we haven't actually, why at the moment it's still in a research stage, because effectively the